My name is Jake, welcome to the channel. In today's video, I want to talk about how to screen dividend stocks and ETFs. I talk about dividend investing here on the channel, and I've talked a lot about time horizon, and I want to talk about what happens after you understand your time horizon and how you can pick the right dividend stocks and ETFs that fit your time horizon. But first, if you're new to the channel, once again, my name is Jake. I am 36 years old. My wife is originally from Germany. She's also 36. We have a little baby boy. His name is Lucas, and he's 2 years old. We live here in Austin, Texas. We're not originally from Austin, but we've been here for a little over 5 years. I created this YouTube channel to help other people like you learn about dividend investing and learn that it's possible as a normal person to build a dividend portfolio that will one day, hopefully, pay for your living expenses so that you don't have to rely on your active income. On my channel, I've talked a lot about time horizon and how to invest based off of your time horizon. I've made 3 videos on this, but this video really is to set you up to show you how to invest based off of your time horizon. I don't go into detail into these videos on how to screen and find the stocks that meet that specific criteria. So after you've understood how to invest based off of your time horizon, I'm now going to show you how to go and find and screen those dividend stocks and ETFs that match your investing time horizon. But for those of you that may have not seen that video already, the important thing to understand is if you know that you have a 10-year time horizon or a 20-year or a 30-year or a 40-year, you need to understand, what criteria you should be looking for. And so this is just kind of a snapshot, conclusion of those videos, how to invest based off your time horizon. There's a sweet spot between the current yield and the dividend growth rate based off of your time horizon. So you can kind of take a screenshot of this or save this. This is kind of the range that you want to look for when you're screening for different dividend stocks. Now, this is oversimplified just looking at the dividend yield and the dividend CAGR, the compounding annual growth rate. I'm going to go into much more detail on different things that you can look at, but this is your foundation when you're setting up your screen on what you're looking for based off of your investing time horizon. Now, this is incredibly important because if you have a 10-year time horizon, you don't want to be investing as if you have a 40-year time horizon and vice versa, right? Because every single dollar that you're investing, you want to make sure that it's working towards your goals because a dollar can go a long way. I know today a dollar might not sound or seem like a lot, and I understand that a dollar is just a dollar, but at the end of the day, a dollar is still a lot of money, and it kind of, looks a little like this.
You want to make this interesting? If I can shoot 6 out of 6 on Albert's behalf, you owe him $1. If I can't, he owes you $1.
Wait, what?
$1? I've never seen $1. Nobody's got $1. Let us see the dollar.
Congratulations, you're a winner.
Thank you.
Come on, you owe him $1.
There it is. It's beautiful. Take your hat off, boy. That's a $1 bill.
Oh my gosh, I love it. I love it. Alrighty, cool. Here, before we dive into the video really quick, I've been told that there's a imposter here on Instagram pretending to be me and is messaging followers here of me on Instagram. You'll notice that the imposter here has 2 underscores. I only have 1 underscore. I will never try to sell you anything on Instagram. I will never try to get you to sign up to any crypto, whatever. Just be on the lookout, be smart. So the remainder of the video, we're going to be using Seeking Alpha. This video is not sponsored by Seeking Alpha, but if you do want to support the channel, you want to sign up to Seeking Alpha Premium, you can use my link in the description below. If you use my link, it'll pull up this page here. You'll be able to get 58% off using my link. And what you'll notice is you'll see here, the first year it'll be 58% off, so $100. And just to give an example here really quick, so if you don't use my link and you just go on Seeking Alpha, you'll notice here that you won't get the special pricing, the $99. They only actually will give you, the first 30 days for $5, and then you have to pay $239. So if you're going to sign up to Seeking Alpha Premium, you can use my link and save some money. So I appreciate it. Obviously, I do benefit from it, but yeah, definitely appreciate it. All right, for the remainder of the video, we're going to be in Seeking Alpha here, and I'm going to walk you through the stock and ETF screeners that they have here. So you may have not known this, but you can go over here in Seeking Alpha and you can go stock screener, ETF screener, and it will pull up this page. Okay, and if you don't have any saved ones, which you probably won't have if you've never used this before, there's already some pre-built screeners in Seeking Alpha that you can take a look at. It's kind of cool to play around with it. Or if you want, you can actually go and create your own screener and you can do it from scratch. Okay, now if you don't want to do that, and if you want to just use mine that I've pre-built for you, I will leave a link in the description below to both of these. It's called DJI Stock Screener, and it will pull up a preset filter of how I personally screen dividend stocks. And it's the exact same thing with the ETF. So this is the ETF screener. It's the exact same scenario setup with the ETF screener, but there's a few nuances here that I'll walk you through when I go into the, the specifics of the ETF screener. Okay. And also in the description of this video, I highlight the different criteria, the different things that you're going to want to consider when you're looking at screening for dividend stocks versus screening for, dividend ETFs, because there's a few different things that you want to keep in mind. Now, I want to highlight that this is not the one and only, means of screening for different stocks, right? You can go and you can screen based off of valuation. You can screen based off of, price to earnings ratio, earnings growth, revenue growth, net, all of those things, debt, there's a lot of different things that you can screen for. I really want to keep it high level, and I want to introduce you to the primary criteria that you're going to want to use if you're screening for dividend growth stocks. Okay, that's the focus of this. You can slice and dice this as much as you want. You can get as granular as you want, but I want to keep it as high level as I can here, and I want to show you the fundamentals, the foundation that you need if you want to build a dividend growth portfolio that you one day want to live off of. Okay, that's what I'm trying to focus on here. So don't go in the comment section and say, Jake, you only cherry pick certain criteria. Like, I know that. I got it. Okay, calm down, right? There's a ton of things that you can do. So we're going to focus on the main things here. Let's go over to the summary section. So once again, we are in the dividend stock screener. So this is the individual stocks. A couple of things here. So in the advanced filter here, you can filter and screen for specific criteria. Okay, now I didn't select everything. I only selected a handful of things here. So for example, I selected the 4-year average yield, the payout ratio, the 4-year average payout ratio. This is kind of interesting to see. The dividend growth over the last 5 years and the years of dividend growth. Okay, now I could also screen for, the dividend yield. This is something that we can take a look at, but here's the key thing. So I'm already going to jump in and I'm already going to flood you with knowledge here. Okay, the reason why I like the 4-year average yield more than the forward starting yield is because for the majority of you out there are dollar cost averaging. If you're dollar cost averaging in your portfolio and you're kind of modeling and thinking about what the dividend yield will look like in the future and what you can kind of rely on, you want to look at the 4-year average yield. The price volatility in a stock and the yield jumps up and down on a daily, weekly basis. This right here doesn't add a lot of value to me unless I'm lump sum investing. If I have $10,000 that I'm ready to invest tomorrow, well then yeah, sure, I obviously want to look at this. But the majority of us, we live paycheck to paycheck. We're dollar cost averaging. That's why I like looking at the 4-year average yield. Okay, so that's just one example of why I have this set up the way that I do, and to kind of help you understand, based off of what, situation that you're in, how you want to kind of look at this, right? You can go and you can look at the different earnings, you can look at the growth, you can look at the performance. This is really interesting. This is unique to Seeking Alpha. There's other screeners out there, like with Dividend.com. I've used that one. It's okay. It's not bad. I like Seeking Alpha because what they do is they also give you the option to filter the return based off of the total return. The total return, as many of you know if you follow my channel, it's not just the price that you see in Seeking Alpha or in Google Finance or Yahoo Finance. The total return is the dividend plus the capital appreciation. This is your true total return as an investor. And that's why I like looking at the 3-year, the 5-year, and the 10-year, just to kind of see, what we're looking at. Okay, so very, very high level, the different things of how I filter the dividend stock screener here for individual stocks. Okay. Now, what I want to do is I want to go into the filters here, and I want to show you kind of some things that I think about. Now, you can filter based off of industry, based off of country. Maybe you want to invest into stocks out of Switzerland. Maybe you want to include like the Nestle's of the world. Sure, go for it. That's fine. You can do that. You want to make sure that you take into consideration the international tax and all that good stuff. But something that you can look at here is, well, first off, let's see, okay, so we have the dividend criteria, the 4-year dividend yield, the payout ratio, 4-year payout ratio, the dividend growth, etc. So if, for example, we wanted to say, all right, I only want to focus on companies that have a starting yield, not only starting, but 4-year average. On average, annualized over the last 4 years, it's been 2% or more. The payout ratio, I'm actually going to leave empty here for this case. The payout ratio is how much a company is paying their, what percentage of their net earnings is a company paying the dividend. And each sector is going to be a little bit different. Technology stocks are going to be different than maybe your utility stock. So if you want to screen for that, you can definitely do that. I'm not going to do it in this scenario here. And so moving on, the 5-year dividend growth rate. So this is annualized. What has been the compounding annual growth rate of just the dividend? This is what we love as dividend growth investors. This is the most exciting thing, in my opinion, is the dividend growth, okay? And so remember what I showed you a moment ago? This slide right here, the average dividend yield and the CAGR, this is what I'm talking about here, okay? So I'm kind of bouncing back and forth, but this is what I'm referencing here. So that based off your time horizon, that's what you're gonna wanna do is you're gonna wanna focus on your dividend yield, actually this one right here, the 4-year average, if you're dollar cost averaging, and then the dividend growth. This is how you're going to screen for stocks that you want to include in your portfolio, okay? And so for this scenario, we'll tweak this in a moment, but right here, what's most important for me is I don't want any dividend cutters, okay? So by having it at 0, and onward, that means that I'm not going to include any company that over the last 5 years annualized, they have a negative dividend CAGR, okay? Really, really important. If you wanted to screen for years of growth, you could do that as well. So you want only, maybe contenders, companies that have paid an increasing dividend for the last 10 years, or a dividend aristocrat, 25 years, or a dividend king, 50 years, etc. Another thing here is the growth or the earnings growth, the EPS growth. I'm not going to go too much into detail here, but if you want, this is a little bit more advanced. If you want to screen for that, this is something that you can do. You want to make sure that the earnings are growing, right? If the company's earnings are not growing, the EPS growth is not there, how are they going to grow their dividend, right? So things to think about, so yeah, the performance here, we got the 3-year total return, 5-year total return, 10-year total return. Right now I have it set at 0, so we're not going to have any company that has a negative return over the last 3, 5, and 10 years, and we can tweak this as appropriate, right? Okay, so now we're going to hit done, and then I want to take you through and I want to show you kind of left to right what we're looking at here. So the summary here, you got the quant ratings, Seeking Alpha, authors, and Wall Street, right? So you got this is only going to be if you're a Seeking Alpha premium subscriber, you can take a look at that. But let's take a look first at the dividend yield, okay? So the dividend yield, for the stock screener, I don't really care much about the ex-dividend date. That doesn't matter to me as much. The payout date, not so much. What I want to look at is I want to look at the 4-year average yield. Okay, well, what company has the largest 4-year average yield? Okay, well, these are the companies with the largest 4-year average yield based off of the filters that we have, right? Now, this is a good starting place for you to then go and say, okay, well, I'm going to take a look at what companies have the highest yield, if that's what you're focused on. Let's say, for example, you're not focused on a high yield, but rather you're focused on a high dividend growth rate. Okay, well, if you're focused on high dividend growth, well, let's take a look and see what companies are paying the highest dividend growth here. Now, one thing that I want you to be aware of is you'll notice if a company has a massive, crazy dividend growth rate, it's probably because they either cut it years ago or it was non-existent years ago. So don't be fooled by the massive dividend growth rates here. Okay, especially with the pandemic these last couple of years, there's a lot of shenanigans going on when it comes to this. You want to look under the hood and understand, is this legit or not? I'll give you two examples of where it's legit. AbbVie, this is legit. Home Depot, this is legit. Okay, couple, cherry-picked examples that you can take a look at. The reason why is this screener here is the foundation for you to find those dividend stocks that you want to then further research. And so that's really what I want to highlight here is this is not, okay, this company fits all the criteria, great, okay, I'm going to automatically buy it on Monday. No, this is to set the foundation to then research further. Okay, so moving on here, you got the earnings tab. This is where you can look for the earnings per share growth. And if you want to filter for that, that's great. You can do that. The performance here, I like doing this as well. I like seeing, okay, well, which company over the last 10 years has done the best? Well, Broadcom. Broadcom is done incredibly. Okay, Broadcom, Texas Instruments, Extra Space Storage, AbbVie, and the list here kind of goes on and on and on. So that's kind of what you can do here. So a company can, there can be a fluke where if, over the last 3 years, okay, a company can do well over the last 3 years, but to do well over the last 10 years, that's something special. But then here's the thing that I want you to think and consider. Well, the last 10 years were great, but what are the next 10 years going to look like? The market works in cycles. So just because a company did well the last 10 years does not automatically mean that they're going to continue to do well or the same over the next 10 years. Okay, so kind of take that with a grain of salt, but it's kind of cool to see, all right, how are these companies done? And it gives you reason to then dive deeper into them. Okay, so in a nutshell, this is what we're looking at. Now let's take a look and let's see, okay, well, we want to focus on companies that have paid a dividend for at least 10 years, okay? They have 10 years of consecutive growth, and we want dividend companies that have paid increasing dividend of at least 10%. 10%, I'm curious if, I haven't pre-done this before the video, so I actually have no idea what the results are going to show. So we're doing this kind of live here. Let's see here. So we got 34. Let's take a look. Let's dive into it. So here, really quick, what we did is we did 10 years on the 5-year dividend CAGR, and we did 10 years of consecutive dividend increases. So let's take a look and let's see, kind of what we're looking at here. Over the last 10 years, let's just screen here for performance here. A lot of these companies, I think more of them you'll know based off of this criteria. You got Broadcom still here, Texas Instruments, Home Depot, Illinois Tool Works, yep, APD, yeah, a couple of years. Okay, so this is cool. Now, another thing that you could do is, let's say, okay, well, Jake, that's great, 2%, that's fine, but I actually want a 4%. Well, let's actually keep this at 2. Remember, we want to focus on the 4-year. Let's do a 4-year average. Okay, there's only 3. Ooh, that's not very many. And then it gives you the results here. So this is how you can kind of filter, based off of your investing goals. So this is with individual stocks. That's how you use the stock screener. Okay, now let's move over and let's take a look at the dividend ETF screener. So the dividend ETF screener builds upon what we just looked at. So the dividend growth, the dividend yield, all of those things, we're building upon that, but we're adding a few additional filters that we want to look at, okay? And some of the ones that I personally like when I'm filtering for, ETFs, I'm going to share with you some things that I personally look for. So a couple of things. First off, I like looking at the assets under management, right? The assets under management is essentially, in a nutshell, how popular this ETF is, how well known is this ETF, right? Has it been around for a while? Are people investing their money into it? It's kind of that. There's really nothing more than that, okay? The next thing that I like looking at is the expense ratio. This is probably one of the most important things when it comes to ETFs, index funds, all of that. So the expense ratio. Okay. Then the next thing that I like looking at is the inception date. The inception date is great to look at because the further back it goes, the more historical data you have when analyzing the investment. So you can kind of see how the ETF has performed in bull and bear markets. That's really why I like the inception date. Then moving on, we still have the same metrics from before, the performance, the total return, right? This is the dividend plus the capital appreciation, and then as well as the dividend, the forward dividend yield, the 4-year average, and the dividend growth, okay? So pretty straightforward stuff. The way that I have it set up is similarly to what we were just looking at with the dividend stocks. So let's go ahead and let's take a look, and I wanna show you some things that I kind of look at. Okay, so first off, you can see here that we only have 60 results based off of the filter, the small filters that we have here. So some of the ones that are going to impact this is the assets under management. So we're only looking at, pretty significant ETFs here, and ETFs that have a low expense ratio. Okay, low expense ratio, and that have, a 2% dividend yield and above. Okay, those are the primary criteria that we're looking at here. And something that you can do is you can filter here based off of what's important to you. If you're saying, okay, well, I only want to go after the whales and I only want to invest into whales, well, you can do that. Okay, you can filter based off of assets under management. You can take a look at the Vanguard Value ETF, VXUS, VYM, SEHD, etc. The next thing that you can do is you can say, well, I only want to focus on ETFs that have a low expense ratio. Okay, well, you can filter based off of low expense ratio. Okay, and you can see which ETFs have the lowest expense ratio, and then you can filter that way. And then, on this section right here, you can look at the inception date, what ETF here is the oldest versus which one is the newest, etc. Right? So you can filter that as well as the current dividend yield. So those are the primary things that you can filter for based off of this criteria here. Then if you wanted to go and you wanted to look at the performance, I always recommend looking at the total return. The 5-year performance, this is irrelevant to me. I don't care about this because I'm a dividend investor. The dividends matter, and I want to know how the fund has performed with the dividend reinvested, or the dividend just in general, right? So let's take a look at the 5-year total return, the highest performing one. Look at that. Our friend SEHD is performing the best over the last 10 years. Okay, and then you can see, all right, well, which ones have done well as well that you can take a look at. All right, so that's the total performance. Let's take a look at the holdings. Now, this is important. When you look at this, you can see you can filter based off of the number of holdings. Now, the more holdings in an index, by definition, I guess the more diversified the ETF is. So that's kind of oversimplifying that, but that's generally how it works. The more holdings, the more diversified the portfolio or the index is, and the more closer, you're going to get to average market returns. Okay, and when I say market returns, I'm generally referring to the S&P 500 or, the total US stock market. So you can filter based off of holdings, you can filter based off of number of top holdings. Now, this is super important, okay? What this is looking at is it's looking at what percentage does the top 10 holdings in the index represent. And in my opinion, this number should be lower. Lower the number, the better in most cases. Okay, so you can see, for example, some ETFs here, SDY is a pretty popular dividend ETF. It only has 16% allocated in the top 10. So that means that this fund is fairly equally weighted. And I personally like that for the most part. I tend to like market weighted indexes and not equally weighted. But in my opinion, the lower this number, generally, the more diversified it is, and therefore the less risky it is because, you're just not overweighting into a single stock. And that's just how I generally view it. So now we can kind of debate back and forth if that's, best for total returns, but just to oversimplify it, in my opinion, you kind of want to make sure that the top 10 weighting are not super, super high. Okay, moving on here to the dividend section. It's similar to what we were looking at with the dividend stocks. You can filter here by the 4-year average dividend yield. You can see, okay, which companies have maintained the highest 4-year average yield. Now, this is something that's kind of cool if you're kind of picking and choosing when you buy a stock. If the 4-year average is higher than the forward yield, in my opinion, that's a simple, easy way to kind of say, okay, this ETF is maybe a little bit overvalued at the current time. Now, if the forward yield is higher than the 4-year average, conversely, you could assume that, okay, well, based off of historical data here, which is never guarantee of future results, you can kind of assume that, all right, well, I'm getting in at a fairer valuation. Okay, so that's something to consider. You can take a look at, just as an example, I'm just like HDV, right? So HDV, the dividend yield over the last 4 years has averaged 3.6. The forward yield is 4.47. Okay, so based off of that metric, it's a little bit, you're getting in at a better price. Okay, now obviously you're going to want to dive deeper and see what's going on. Why is that? But that's kind of an easy way to screen for companies that are maybe at a good value today when you're looking at a screener like this. Now moving on here to the dividend growth rate over the last 5 years, you can see which companies have grown their dividend, which ETF has grown their dividend the fastest. Now SCHD here, very, very high up at just under 14%. And you can see, okay, well, there's been some more that have it higher, but then asking the question, well, why is that, right? You're going to see a lot of ETFs that have higher weighting to oil doing very well on this list today, right? And so depending on when you're doing this, if you're doing this here in 2023, it's obviously going to look very different than in 2021, 2020, and then obviously going forward in the future. Now, over here to the right, you can see how the frequency of when the dividend is paid out. In my opinion, anytime a dividend is paid semi-annually, that is a no-go for me. Because I want to live off the dividend income, I want to get the dividend paid more than twice a year. Okay, so regardless if it's the best ETF in the world, I don't care. This is just me personally. I don't want it. At the minimum, I want a quarterly dividend. Okay, so quarterly dividend. And if you're going to get a monthly dividend, usually you're going to sacrifice on the expense ratio. So if an ETF is paying more than quarterly, generally the expense ratio is going to go up. So there is a give and a take when it comes to that. So something to be aware of. Now I want to go on and I want to make sure that I say this, that when you're screening for individual stocks and additional ETFs, in my opinion, this should make up part of your satellite position. Okay. Now, what does that mean? For those of you that follow the channel, I talk a lot about the core and the satellite approach to investing. Okay, I'll leave in the top right a link to that video. But essentially what it is you have your core positions and you have your satellite positions. Your core positions make up the majority of your portfolio and they're simple passive index funds, ETFs. Okay, and the weighting is anywhere from 70 to 80% for your average person. And in my opinion, the simple path to wealth is to hold 70 or 80% of your overall portfolio will consist of SCHD and DGRO. If you're looking to live off of a dividend growth portfolio in the future, the simple path to wealth is SCHD and DGRO. I've talked a lot about this on my channel. I'll leave a link in the description below. You can learn more about that. And then the satellite positions, the remaining 20 or 30% can represent individual stocks or additional ETFs, for example. Based off of your time horizon, you want to construct it so that it can meet your goals, right? It's that combination of the current dividend yield and the dividend growth, okay? And you'll want to balance it based off of your needs and your goals on when you plan on living or tapping into the dividend from your investments, okay? So that, in a nutshell, is how I view this. What I just shared with you, this is really focused on your satellite positions. If you want to add additional holdings or companies or ETFs to your core portfolio, and your core portfolio, as an example, would be your SHD and DGRO. So I hope that helps. I hope that makes sense. If you have questions around the core and the satellite and how I view this, leave me a comment below. I will respond to every question the best that I can and answer as many questions as I can. And if I don't respond here on YouTube, you can send me a message on Instagram, and I'll do my best to respond there. So I hope that this was helpful. I hope that you learned something new, and I'll catch everybody in next week's video.
So please, whatever, I want to reach 1 million likes. Okay, thank you.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.